You're still with Business Saturday and onwards then to all the international market action. Wall Street ended mixed, with the bulls failed to defend early gains due to a weak housing data that overshadowed solid corporate earnings. Now the Dow rose, backed by strong earnings from Procter & Gamble. Let's cut across to CNBC's Eric Kemi, who gets us a detailed wrap of all the action on Wall Street. Kemi?
For CNBC TV 18, I'm Eric Chemi. U.S. stocks finishing mixed today. The Dow up 64 points, the S&P down just 1 point, and the Nasdaq losing 36. Existing U.S. home sales falling this month. The National Association of Realtors announcing that existing sales plunged by 3.4%, the most it's dropped in over 2 years. This report coming as mortgage rates rise and new home building is dramatically slowing down. Apple CEO Tim Cook calling for a retraction of a Bloomberg Businessweek story on Chinese spy chips embedded in the company's server equipment. Cook told BuzzFeed News that he personally talked to the Bloomberg reporters, along with Bruce Sewell, who was then their general counsel. Cook says he was very clear with Bloomberg that this did not happen, and he answered all their questions. A representative for Bloomberg said their company stands by its story. Toy maker Hasbro is planning to cut its workforce by about 10%, according to a report from the Wall Street Journal. Like other toy companies, Hasbro has been dealing with the fallout from the bankruptcy of retailer Toys R Us earlier this year. The job cut announcement comes just months after rival Mattel said it would also be trimming its workforce and closing its New York office. That's the action from the U.S. market. Back to you in Mumbai.
Let's listen into some expert commentary on the way ahead and outlook really for the U.S. markets.
I think the language in the last press meeting that we're going to go past neutral, we have a long way to go, that shook up some people. But look, we're normalizing the entire picture, not just interest rates. Volatility is normalizing. PEs are normalizing because we're no longer in that era of financial repression where we have to do everything to fight potential depression. That's over and gone, thank the good Lord. Now we're just kind of trying to plot a way forward for this cycle, and the economy and the earnings are doing well, but we've had some PE pressure.
Despite the fact that markets haven't performed that strongly in other parts of the world, we haven't seen a huge capitulation or a huge cratering of earnings. I think top line around the world looks pretty good. It's a question of whether or not companies can control their costs at this point in the cycle, whether or not they can absorb higher inflation and really maintain their margins. I think what we're seeing is kind of a backup in expectations around CapEx and investment spending. Think about where we were at this point last year. If we were going to get a tax bill, and in the first quarter of this year, everyone was super excited about how companies were going to spend a lot more and what that was going to mean. That hasn't really shown up. The only places we're seeing spending is technology. We're seeing a slight pickup in terms of energy because that's like off of an extremely low base in 2014-15. So I think that's getting reflected, is that if we don't get that next wave of CapEx and investment, we don't have great 2019 earnings after this adjustment for prices.
It's time for a quick crude check on the show. Crude oil prices bounced back on Friday after declining for 2 sessions due to a large buildup in the U.S. crude inventories. The commodity closed the day 0.3% higher at $80.02 per barrel.